Welcome to another exciting episode of Financial Wellness with financial guru Clive Harper. This episode is made possible with the kind assistance of Invest in Yourself.
What are you going to do with your money when you retire? Start early. Speak to your financial advisor early so both of you can craft a plan that will sustain you in your golden years. There are many products you can invest in when you retire. Let's look at the first product. The first product we call a living annuity. Some companies call it an equity-linked life annuity or a retirement income option. This is a retirement plan that gives you a flexible income. You can draw between 2.5% and 17.5% of your investment as an income. This is a wonderful product if you draw a lower level of income. If you draw 2.5% or 4% and your fund value grows by 10%, it means that your capital will increase every year. But on the other hand, if you draw 17.5% and your growth is only 10%, that means your capital will be eroded by 7.5%, and down the line you may run out of money. So be very careful with this product and seek professional advice from your financial advisor. The second product is a fixed annuity, whereby the lump sum that you have will buy you a fixed pension for life. And there are various options. You may be single, you can buy a single pension, or if you're married, you buy a joint pension. That may be a level pension that doesn't increase, or a pension that increases at 5 or 10% or 15%. The higher the increase you select, the lower the starting point of that pension. But what about the people out there who want to leave a legacy for their children or their grandchildren? They can then buy a pension with a capital guarantee. Let me give you an example. You've got R1 million and the insurer will then guarantee you and your partner a pension for life, and then on the last person's death, that R1 million will be returned tax-free to your nominated beneficiaries, and those may be your children or your grandchildren. The third product you could invest in is a with-profits annuity. Now the term annuity just refers to a pension, so this is a with-profits pension, and there you decide once again, is it a level, is it a joint pension, is it single, is it increasing, and your increase will then depend on the growth of that investment policy. And these with-profits pensions, you can decide, do you want to target inflation or 70% of inflation or inflation plus 2%. The advantage of this product is you have an option. You can decide if you want a 13th check, and all that you have to decide is, do you want the 13th check in December, or on your birthday, or on the policy anniversary, which is 12 months later. The fourth product you can consider is a voluntary annuity. So let's say you take your 550,000 Rand tax-free amount and you want to invest it, and you need something to supplement your pension. You can then invest in a voluntary pension. The advantage of this pension is that only the interest content is taxable. This will be a pension that will be payable to you or to you and your spouse for the rest of your lives. And let's say the pension, I'm just using an example, is 10,000 Rand, but only a portion of that 10,000 Rand, the interest content will be taxable. So you may even be getting a pension of 10,000 Rand and only 4,000 Rand will be taxable. Some people may even invest some of their voluntary money in a flexible investment, which is a unit trust, which is a basket of investments that is invested in different investment portfolios, and from there you can draw an income as well. So I want to share a personal story. A client of mine who retired, and fortunately he had made sufficient provision. So what we did was a portion of the money was invested in the living annuity, where he drew 2.5% as an income. Now, last year the fund grew at 15%, so his capital has increased substantially. A portion of the money was invested in a fixed annuity with an inflationary increase. Now, every year that part will increase by inflation. And the last part of the money was invested in a with profits annuity because he wanted a 13th check to spoil his family at the end of the year. This was really a fantastic combination. So when you retire, you don't just have to invest in one pension. There's a multiple of pensions you can invest in. Don't just do one. You can invest in all three or two. You decide what best suits your specific requirements. You can also consider when you retire to take out a portion in cash. The law makes provision that on your pension fund or your retirement annuity or provident fund, you can take out 1/3 subject to tax. If you haven't taken out any previous withdrawals, you can take out 550,000 Rand tax-free, and anything above the 550,000 Rand gets taxed at the withdrawal rates of tax, which starts at 18% and then it moves to 27% and then 36%. So it is advisable to get professional advice, make an appointment with your financial advisor so that these options can be explained more clearly.
This is the end of our episode for today. Thank you for watching. If you found this episode useful, please like, share, and subscribe. Feel free to contact Clive at any time. He will be glad to help you achieve financial wellness.
Listen, Tranquility Base here. The Eagle has landed.